What's up, y'all? As y'all know, it breezy. I'm back again with another one. Market breakdown on GBPUSD. And firstly, I'd like y'all to subscribe, those who haven't, and like and share. Let's grow together. Anyway, moving forward, this is GBPUSD that we're looking at, and we are Friday. Yeah, Friday. I entered a trade whereby it was a re-entry on top of that, because the first entry I entered, take profit was hit, which by I showed y'all, which was this one, take profit was hit, whereby we took it on the 15-minute. And if I go to the 15-minute time frame, this is what y'all are gonna see, whereby I showed y'all and I posted it before I took the trade. So yeah. And again, guys, I do not do signals like doing that. No. One thing I do is here to help, whereby, market breakdown and that, that's it. So, yeah, guys, as y'all see here, for me to take this trade, I just want to break it down to y'all for you to see why I took it, what I saw, and why, like there's always has to be a why. As I always say, you won't just jump into the market because you feel like that. You won't just take a trade because you feel like that. As I said yesterday, and I'll say again, we do not do that. You trade or you execute because you know why you're taking the trade. You won't just take a trade because, no, that is not done. But again, as we saw that we were rejecting that resistance up there. And again, this is GBPUSD. It's a pair. And as we know, pairs really do respect our zones. Trust me, pairs really do respect. Because as you see, price couldn't break. Price melted. Price melted. Price melted. And after hitting there, price closed with that bullish candle. And then we had that subsequent bearish candle. After that, price jumped. So we saw that, hey, we also created support there. We can use our lines to mark that. We also see that, hey, we created support when price rejected down there. So we can use our horizontal line to mark that. Let me make it just a little more brighter for you all to see. Let me use green. That's not green, man. I guess that's better. So yeah, as we see, we got support right there, which is that week whereby we just rejected. So that week shows me that let me do this for you all to see. Yep, this week shows me that our price is really weak, because remember, after we had that week price really rejected. That's what we see. After we had that week price melted, we had another candle which did the same. Price melted. After that, we had a subsequent candle. So this has to show you that, hey, price is really weak to go down, because price really rejected not once but 2 times. Remember, guys, you trade what you see, not what you think or what you feel or what you heard. You trade what you see in the market. As I say, let the market come to you. You do not go to the market. The market should come to you. And what do I mean by that? Is the market showing you great setup? The market is allowing, and your strategy is also confirming for you. Your analysis is confirming. Fundamental, mostly I use fundamentals when it comes to news, like CPI and FP mostly, but fundamentals for me doesn't play a big role unless if it's an event. But knowing that, what moves the market, why did price go up, why did price go down, like things like that, that's important. But yeah, as you learn, time goes, as you learn, you improve, you gain something, you gain more knowledge. That's the purpose of it. You keep evolving, you keep elevating, you keep progressing, you keep growing. Because trust me, the more you take steps forward, the more you grow. You're not in one place. Because remember, the goal is to be financially free. For me, it's not the money. Yeah, the money is good, but like the financial freedom is key. Doing whatever you want whenever you want. So yeah. So back in the market, as you can also see this bullish bullish candle, how we melted. Look at that, bro. Look at that. So my entry was after that rejection right there, because after that impulse impulse correction to the downside, we had that correction again to the upside, whereby we rejected that support. After rejecting, what did we have? That subsequent candle. So firstly, that's number one confirmation for you. That bearish subsequent candle, that's the first confirmation for you. Second confirmation, we had a rejection whereby we marked our support. That's the second confirmation for you. Because why? We had a rejection, we had a subsequent candle, we had a retest, and now price is pushing to the upside to retest that resistance up there, and whereby we never hit that resistance. But if you pay close attention, there's a resistance line which I created there, whereby it also acts as support, and now it's resistance, you see. So that's our third confirmation that, hey, price hit resistance. We had a subsequent candle. Price did retest. Price pushed to the upside and did hit that resistance, whereby price did retest and price was weak. The candle melted. So that shows you that, hey, price doesn't have the strength to go up. So that's a fourth confirmation for you. So now you have four confirmations showing you that, hey, price cannot go up. We hit the first time, we rejected. We hit the second time, we rejected. We hit the second time, we dropped. We hit the second time with a clean candle, but yet we never broke. Again, we had a subsequent bearish candle. We hit the fifth time, but price didn't go up. So this shows you that, hey, price really doesn't have the strength to go up. So what do we do from here? Our setup has to be the one that tells us, matter of fact, our strategy. Because remember, we're using supply and demand. In this case, support and resistance. And what do I mean by that? One thing I've realized is that pairs really respect those zones. That's one thing I've realized. Pairs really respect those zones. So if you see those support and resistance, and if you mark everything correctly, I really assure you that, yeah, you're fine. Because trust me, the market will never change just because like this and that, unless if there's some kind of volatility. Because remember, everything we see here, this is price, this is liquidity, this is liquidity. Everything we see, this is liquidity. It's not just candlesticks moving because they want to know. This is liquidity. This is money moving here, there, and then like that's why we having like those down moves, up moves, down moves, like those lower lows, lower highs, lower lows, lower highs. This is money moving here. This is people in the market placing. And if like you kind of see those candles just picking up in one straight line, that's what we call consolidation. You never trade a consolidation movement. Why? Because we're just moving in one place. And again, as the word says itself, consolidating, we're just playing in one play in one place. So price is just sticking in one place. And for me, I think that means like there's a lot of buyers and sellers in the markets, because like price cannot move. Price is just playing in one place. As you see after the drop, you see, after the drop that I said, price really pushed up. And if we mark that, we see that we do have resistance up there. I'm just trying to give you I'm just trying to give you all as much info as I can, because why not? If I can, you can too. That's how it is. As we see right there, we also created resistance. I'm sorry for that. We also created resistance, whereby we also see that price respected it. And now that resistance we created, they also acts as support. Can you see that? It also acts as support. And that candle that melted, it like price of everything, that resistance also acts as a support, like for real. Like look at it. It really acts as a support. And after that rejection, you can see that we had that bearish subsequent candle, whereby we had a fake out. So this is a fake out whereby a candle breaks that support or resistance or that trend line, and then price continues the first continuous trend. So that's a fake out, and like pay close attention to fake outs. They are a real thing. Because like fake outs may have you thinking that price is really going away, and then boom, it turns against you. And as I say, defense is key. Defense is number one. And what do I mean by that? Using a stop loss. Yes, sometimes not using a stop loss is good, because I do not love using it, because you might put it there and probably price might retest and take you out and continue. But most of the times, a stop loss is really needed, because like, let me put it this way for you. Imagine you have a company, and like you really running hundreds, thousands of dollars every month. And like for you to keep that kind of portfolio, for you to keep that kind of amount, that kind of money in your business running, you have to have a certain percentage whereby you pay your workers, a certain percentage whereby it's for the repairs, a certain percentage for insurance, a certain percentage for this, a certain percentage for this. So what I mean is, in every company, you're gonna have a certain percentage whereby it's gonna be for a rainy day, in case if inflation hits, they know that, hey, we have a backup amount which by it's gonna help us with this. So having certain figures, like just to keep you up for a rainy day, it also helps. So that's what I mean by saying you need a stop loss, because stop loss is gonna help you too. Because imagine if it's an event and you do not have a stop loss, and price doesn't go your way, price takes you out hard. You have to start all over, get that money that you never had, and then put it in the markets and start all over again. You see, like, we never want that. It's the same as you just taking setbacks. You're just taking more steps back. So don't do that. One thing I can advise you to do is just invest in yourself. If it's hard, yes, sometimes it's hard, but like at the end, it's gonna be so worth it. Nothing hard comes easy. Everything is earned. So yeah, just keep it up. Keep it up. So as I was saying, as we see, this resistance we created has now turned into also some kind of support, but that's past price. We do not look at that. We look at the price that's active. So what do I mean by this? As you see, take profit was hit, which by it was Friday, last Friday. Take profit was hit, and as you see, we just created also our support right there. As you see, when price hit that, we had the subsequent candle. That's what I was just talking about up there. What we had up there, we just had down here. Because as I always say, in every impulse, we have a correction. And like this was the impulse to the downside. This was the impulse to the downside. And like we can look at this as a glitch. We can look at this two candles to the upside as a glitch. Why? Because for me, this is how the market is really moving. For me, that's how the market really moved. As you see, the market really pushed, and then we retested, and then we dropped. But for me, this is how we moved. Let me show y'all. For me, that's a glitch for me. Because for me, this is how we went. This is how we went for me. We just went down, and then we had that retest, and now we pushed even more to the low side. And then we had that third retest. That second retest. And then now we just pushed to the downside, whereby we pushed again to the upside, whereby we had a strong bearish candle, which is targeting that support, whereby we can hit support. What do you think? Obviously, we have resistance up there. We have resistance up there. So, it is right for price to continue and touch that resistance up there. Because, like, really, from here, as we see how price is really playing, it makes sense for price to respect this support and go retest that resistance up there. And probably we might also break, because remember, it's a Monday, and mostly on Mondays, I don't like to trade. But we can also break, because, like, price has been down for a minute now. Price really has to breathe. So, yeah, this is what I'm on. And then if we pull this resistance even more, you can also see that, hey, it really plays a big role. What do I mean by that? This is what I mean. As I said earlier on in the video, that support and resistance is everywhere. It is everywhere. You just gotta pay attention and look at this. Also, the candle that are rejected. I never saw that one. I never saw that one. I won't even lie. Look at this. The candle that are melted, it are rejected that support. Matter of fact, it was the one that created that support for us. Because after that week, we had these candles piling in on that support, respecting it, just playing on it, rejecting those fake outs. As you see, this is also support right here. This is also support right here. What do I mean by that? This is what I mean. This is what I mean. Support and resistance is everywhere. This is also support right here. Because if you look at this, you can see that, hey, price really huddled there, like candles really stacked, like they played there. Because after that impulse drop to the downside, it was obvious that we're gonna need a correction, because as I say, in every impulse we have a correction. So we had an impulse move to the downside whereby price started rejecting. As I said up there, that price couldn't break. We had same thing down here. We saw that, hey, price hit the first time, we had a subsequent bullish candle, price rejected but couldn't break it, and then we had a subsequent bullish candle again. This time it was strong enough to break that support, whereby now it acts as a resistance. So here you could have had a second entry right here, like just being honest. Right here, you could have just had a second entry. And what do I mean by that? This is what I mean, because we are on the 15th, right? On the 15th, this is like, wow, I never saw this. You could have had an entry right here by simply using, let me do this, let me show y'all. As you see this week right here, whenever you use your lines to use, like whenever you use your lines to create support and resistance, I'm sorry there, whenever you use your lines to create support and resistance, make sure that they are straight and make sure that they are on that first week that you want to use. You know, don't just place it wherever you feel like, or where like you think they are good. No, we have wicks for a reason, we have candlesticks for a reason. If it wasn't for candlesticks, probably we would have just used graphs. But anyway, let me show you all this setup, because I'm seeing a setup whereby you could have just entered it again right here. As you see, this is also a breakout. I just hope this is visible to y'all. This is also a breakout, a beautiful one. I just hope this is visible to y'all. I just created a resistance with the line right there. And what do I mean by this? Let me show y'all. Whoa. Just want to show y'all that y'all could have entered a second entry right here. Because after that take profit being hit, we had a retest right to the upside. And after that retest, price really confirmed for us that it was going to go to the downside, because we also rejected and price really showed us that it wasn't going to go up. And obviously, it was right for price to retest, because that's what we had in the beginning. If you went to the daily, you were going to check the structure, market structure. So before you analyze, start on the daily time frame. You check the market structure, H4, you analyze, break down, H1, analyze, break down, and then you execute on a smaller time frame, whereby the 15 or the 5, it's your own choice. But I prefer the 15 because the 5 really moves too quick. But the smaller the candle, baby down, I'm sorry for that. The smaller the time frame, the more the candlesticks. The smaller the time frame, the more points we secure. So yeah, this is what I'm on, y'all. Look at this. This is the second entry I'm talking about here. As we see that we had an impulse to the downside, we had that correction. After that correction, that was a confirmation for us that, hey, price was really gonna retest and continue going up. And obviously, y'all were gonna catch this trade, because it was so clear that we just rejected support. We had a subsequent candle, and again, we broke our resistance line that we created over there. We broke it to, oh, what am I doing? I just want to show y'all that y'all could have entered a second trade right there. A simple 1 2 3, bro. Simple 1 2 3. Oh, is it a 1 2 2, bro? Oh, damn, what am I doing? And remember, guys, like, defense is key. Defense is key. That's what y'all have to put in mind. Bear with me. Defense is key. Y'all see that? Y'all see that? Y'all could have held this one. Like, this is a beautiful setup because, like, it shows us. It shows us that, like, nice. Because, as I always say, in every impulse, no matter the trend, in every impulse, we have to have a correction. No matter the trend, in every impulse, you're gonna have a correction. In every impulse push, whether to the downside or whether to the upside, we always gonna have a correction. So as y'all see here, this is what I'm talking about. This is what I'm talking about, y'all. This is what I'm talking about. As you see, we had our support right there, which we created. Immediately after price rejected this resistance up there, we also created support down there, whereby price didn't reject once but twice, and then we had the subsequent bullish candle. And a confirmation for us here is this candle breaking this resistance that we had, whereby it was support, but now it acts as resistance. As you see, this candle broke it. So that's a confirmation for us, because remember, breakouts on a smaller time frame, breakouts on the 15 or the 5, breakouts on a support, resistance, or a trend line. But again, you have to have confirmations for you to, like, just to make sure for you that you are taking the right trade, because you won't just look at a setup and say, hey, this is a sell, and just take a sell. After losing the trade, you're gonna regret it, and sometimes you're gonna fight with yourself, like, just, physically, emotionally, and say you could have closed, you should have, like, things like that. So it's better to do the right thing than regret later on. So follow to your plan, and everything else will fall in place. As long as you have a plan, stick to it and keep going hard. When the going gets hard, go harder. That's how it is. You never stop for nothing. If you want those millions, we are going to touch them. Let's keep going. Let's keep growing together. So yeah, that's how it is. So after we had this break, that was our confirmation for us that, hey, that's the confirmation. Because remember, firstly, we rejected, and this was a beautiful bearish candle, whereby we rejected, and the second candle was bullish. It held its price, but we had that retest. And for me, this is a glitch. For me, this bullish candle is a glitch. Why? Because for me, we just still continue heading to the downside, bro. Like, just look at it. We're just continuing heading to the downside. That's just how it is. Because we hit that, we retested, we had another one, we had that retest, which I'm talking about. We had another one, we had that second retest, and now I'm looking for price to drop and probably hit that support and retest that resistance. So Mondays, we might say those buys for sure, but as I always say, you take trades based on what the market shows you, and again based on your strategy, because remember, we do not have the same strategy. But I'm feeling that if you use this kind of strategy, right, and like if you are dedicated and like you really put in the work, I see no chances of you blowing your account. Because again, remember, risk management, you risk how much you're willing to lose. If like you have a $500 account, you won't just risk $100. It makes no sense. If you have a $500 account, for me the right way is to risk probably $5 to make $20 a day. For me, that's the proper risk management, because at the end of the week, you're making $100 in 4 weeks. About, like, so that makes sense. End of the week, you're making $100. Every week you make $100. So meaning there's 4 weeks in a month. So in a month you're making 400. So you make 90% of your account in a month. So like that shows that consistency is key, because mostly want to make their account size in a day, and that makes no sense, because the people that are doing that, probably they have 10 more experience than y'all. So never compare your chapter 1 to somebody's chapter 80. I don't know if that makes sense to you, because most people trying to compare their chapter 1 to somebody's chapter 30, forgetting that that person started before them, and that person has more experience and knowledge than them. And we can also get there. You can also get there to a point where you have extra knowledge. What should you do? Invest in yourself. Read books based on growing yourself, growing your, mentality, your sanity, everything. Financial books, psychology, just invest in yourself, grow, evolve. There's always room for improvement. That's what I always say. So, y'all, thank y'all for your time. And I just hope this was really valuable, because, like, yeah, just hope you'll learn something every day and, like, back test and put in the work, because trust me, nothing beats hard work. Work smart, work hard, put in the work, be dedicated. No matter how hard it gets, when the going gets harder, you go harder. You never stop for nothing. Because once you stop, it becomes a habit. You're gonna become quitting every time. You never quit for nothing. When the going gets hard, you go harder. I thank y'all. Subscribe, like, share, Breezy signing out. I thank y'all for your time.